And together, we are the Three Amigos.
Oh, we didn't see you come in. Welcome.
We'd like to thank you for coming to the Andrews 2 Country Club. If you would be requiring anything tonight, just speak to the orderly. They can take care of any needs.
Quite. We'd like to talk to you today about the Andrews 2 Company, about what made us one of the leading companies in the sensor industry. We'd also like to talk to you about our mission statement and about how sticking with our mission statement led us to success.
First off, our mission statement from the beginning was to dominate the market by placing two products in both the high and the low-tech market. Through high automation and heavy investment back into our plant, we wanted to create an environment that was conducive to change and improvement. Isn't that right, amigos?
That's right, Jake. We invested constantly back into our company, year after year, and the goal of this was to, through high automation, increase our contribution margins. By increasing our contribution margins, we can therefore effectively lower our prices, which the customers loved. And through having a high customer base, we were able to sell high volumes of profits, which led us to great success and high profits. And this, in summary, helped us to avoid what our analysts call a boat full of fail.
Fantastic shot, Matt.
Well, thanks, Ben.
I would also like to add that our analysts predict by the year 2020 that we will have taken up to 50% of the sensor market.
That is, of course, after we buy out Digby and Erie.
Of course, by offering their shareholders and management fantastic opportunities here at Andrews 2.
Of course.
Quite. Now, in building the empire that is today Andrews 2, we did have to start out humbly. After a disastrous practice round, in which we didn't invest back into our company in early rounds, we learned from that mistake so that we could gain ground 6 out of the 7 rounds.
Because of the mistakes that we made in the 2 practice rounds, we were able to, in later rounds, keep the dogs at bay. In rounds 2 and 3, Chester gave us a definite run for our money.
In fact, in the later rounds, Baldwin actually came back and started providing quite difficult competition for us, and we had to keep them in mind and Chester in mind as we made the decisions for each progressive round.
Quite.
And then also, round 7, we lowered our prices by $3 on our high-tech in order to keep Ferris out of the market. Ferris really had no chance.
Why, Jake, what do you have here?
Well, according to this research, which I just did in my head while sitting here, we forecast the next sales rounds as follows. The Fantastic Able to sell at 1,950,000 units. That's good. Ace to sell at 1,400,000 units. Apollo at 1,300,000 units. And Arrow at 1,050,000 units.
Those are some crazy numbers, Jacob. But what exactly do they mean?
Well, Ben, what this means is that for this year we're planning on achieving our goal of a 30% market share, increasing and gaining even more ground on our competition.
What competition?
Andrew.
So hot right now.
Quite. Furthermore, our ROE will increase to 46.3, our ROA to 25.6, and our ROS to 15.5.
Touche.
Wait, According to some calculations I did in my head while you were talking right then, I realized that our stock price is going to increase to $80 a share next year.
That's right, Matt. Over $80 a share.
Well, with that type of increase, we could invest, let's say, $17 million exactly back into our company in plant and equipment. You know what I'm talking about.
I totally know what you're talking about. And we know that after the faux pas in the practice round, how important is investing back into our company? It's very important. That's the answer to the question I just asked.
I agree.
Fantastic. Quite. I suggest, using some calculations I did while we were exclamating, that we retire $9 million in stock, issue a $5 dividend, of course, and borrow $5 million in short-term debt.
Brilliant.
Definitely brilliance.
A financial strategy like that will help us to maintain healthy financial ratios. Ratios that are key to our company, such as return on equity, such as return on assets, an important ratio known as leverage, and other ratios such as days of working capital, which are very important to our company. By retiring stock and by issuing dividends, we're able to maintain the balance for what we really want, and Andros too, in terms of leverage that is above 1.8 and days of working capital that is below 90. And by doing this exact financial strategy, we're able to achieve those numbers that stockholders and shareholders look for.
I concur.
As do I. Concur.
We have our strategy, and we're sticking to it. As a team, we'll work so well that we will even finish each other's
Sentences?